All right, let's kick off governance call number 26. Today we have a lot of stuff on the agenda we have to go through, and I took a look at my calendar today, and it turned out we are in April, and apparently April derives from the ancient Latin word aprire, which means to open, which is a very fitting description for this month because we are open to all the good news and proposals here. And if you're with us in this call or watch this recording, you are going to hear them too. So make yourself comfortable, sit back, and let's get this going. Now, as you can see behind me on this site, we have the agenda for the call today. So I'm going to go through the governance update very quickly because we want to spend as much time on the other topics that we have on the agenda. And we can say that we have 6 governance proposals in the RFC stage right now, live on the forum. So 6 in total, 4 of them related to our Treasury and also on the agenda today. So we are going to be talking about them very, very briefly. And without wasting too much time, I think we should jump straight into the first one, and that is the lending market proposal. So Lucas, if you are here, would you mind talking about that and maybe also make the announcement that most other people heard today as well, but in case they didn't, let's make sure to share it here so everyone hears it.
Well, there's a lot of stuff happening today. I'm here with Grayson, coming in from Dubai. So I guess, well, one of the things we did is we announced our fundraise, $15 million round. So very happy to have a lot of great brands to support the mission of Centrifuge and help us build out our vision of the future. And speaking of vision of the future, one of the things we always did, right, from the very beginning was to find ways for these tokens that are created, these real world assets that are created, to actually have utility, right? And well, one of the biggest things that users ask when they see that they have like a tokenized T-bill on chain or another kind of real world asset is like, okay, well, can I lend and borrow? Can I trade? Like, what can I do with it? And so we've been working on I've worked on a governance proposal to actually start. Mostly, it's to launch an RWA based, like RWA focused lending market. That's a bit of a continuation of the original work we did with Aave back in 21, and basically allowing people to access real world assets like leverage. So like giving people the ability to immediately redeem if there's liquidity in the market, right? As opposed to like in the worst case with real assets as it normally is, right? Like you have at least a day that it takes for like your underlying asset to be sold, the money to go from the custodian to the bank account to the to Circle to USDC to then the investors in the pool, right? So this process is a bit slow.
In my mind, it looks stupid because now we have to go for an app.
Can we mute? Yeah. So one thing we started doing, well, so one thing that you want to do with these real assets is like offer immediate liquidity. Crypto is on 24/7. If you don't actually have liquidity 24/7, right, like it's a lot less useful. So that's kind of the reason why we thought a lending market is actually interesting. And so kind of like as described in the initial proposal, it's really to kick off a discussion around what is actually needed, what kind of assets are good, what have we learned from the work we did with Aave, and how can we improve on this to like then actually ultimately launching it, hopefully. So a few things that I can highlight that are interesting are or how I already think we can differentiate it, and I'm forward to hearing like feedback and other ideas. The first one is Coinbase attestations are a very easy way to access it, to ensure that a very broad, like massive amount of users have actually gone through Coinbase, onboarding are eligible to trade. Therefore, like it simplifies things like making sure that we don't have accidentally any sanctioned countries or sanctioned persons interacting with this market, right? Simply by having a Coinbase attestation, which is a couple of clicks for a user of Coinbase. And just to give you an idea, Coinbase has, I think, 125 million customers today. And I think they have over 25,000, this number, at least 25,000 attestations that where Coinbase users went and kind of did that. So just to give you, to compare that, right, like the alternative would be for however this market would be structured to have KYC, where you need to like show your passport, prove your residence, et cetera, et cetera. That is, of course, an onboarding process that's much more friction than a couple of clicks. It also means that like everyone has to do it from scratch, whereas like the likelihood that someone has a Coinbase account and is actually eligible to trade there is of course way higher, and so it's like it creates a much more accessible market. The other component that I think could be interesting in this is we've done a lot of work with Cayman foundation structures, right? Like Prime is built around creating this legal conduit that gives like a DAO power. If we kind of launch this market with the right kind of legal structure, we can actually have a market that is compliant, that gives investors good protections because it has this legal entity, but it still is ultimately under the control of the DAO because of its use of like a Cayman foundation that can be instructed by token holders. So these are kind of some of the elements. Maybe one last one that I would say is like another big learning from kind of doing this market with Aave is like back then most of the assets on Centrifuge were very like relatively liquid in traditional terms, but like very illiquid for like compared to like T-bills or most on-chain assets, right? And so we had this problem that like the market would increase very rapidly as the crypto market overall grew, and as the crypto market overall crashed, right? Like FTX happened at the time, as the market was active, like it would go down drastically, and so like you can't do that actually if you're trying to give lenders immediate liquidity, but the underlying assets take like 6 months to liquidate. And so one of the things that I think we should focus on is really making sure that we only take the most liquid collateral, so that in the worst case, right, like the market could be illiquid for a day or two, but that it never really takes that much more time. So that like in this relatively volatile crypto environment that we still are in, we ensure that like the market doesn't become illiquid and can actually grow. So I think this is a quick summary of kind of this initial proposal. How I imagine kind of this process to go is like, first, kind of this proposal to generate a high-level mandate for us to start working on this. There's a whole bunch of legal work that has to happen after. There's work of figuring out how do we do risk management and setting some of these parameters. Is that by working with one of the DAO service providers like Stakehouse or Chaos Labs or Gauntlet, for example? Do we build a group within the DAO? Is there like kind of figuring out all these processes? So that is one of the things that has to happen. And then there's of course evaluating the technology. As I said, I would suggest we deploy it on Base because of the easy onboarding that it gives us with Coinbase attestations. But beyond that, right, there's a choice we have to make and how we actually which of the different open source lending protocols we could use to launch this market with. And ultimately, I think the goal should be to partner with one of these protocols and make sure that they kind of support this project and do it together jointly with us. So this kind of first proposal outlines some of these challenges, and what I'd like to do is for there to be like, of course, a discussion now, kind of get feedback from all the different stakeholders, and then from there on, actually, kind of if the proposal is approved, start working out some of these challenges and kind of going really deep into it. So maybe I'll pause here for questions or any feedback. Really would love to hear what everyone thinks.
I'll just jump in because I raised my hand. First and foremost, congrats on everything, the raise, just everything that's been happening, Lucas. I haven't read the full proposal yet. I will definitely do so and provide some feedback, but this is a really timely opportunity that I had to actually broach right now. So Jay Trana from the Kusumerian, he is asking if you could be able to be tomorrow on Mario Narwhal's big space. So this thing's going to have thousands of people listening. It's 1:30 p.m. EST. And if maybe you can't go, maybe Baji, maybe some other core contributor could jump on, because I think it'd be a massive opportunity.
I'm in touch with them. I think like if it's possible, it's possible, but also like it's token 2049 in Dubai, so like
I figured as
one
much.
day notice period is a bit like chaotic. I have told them that as well. They text me.
Okay. As long as you know about it, as long as somebody has back channeled that to you as well, I wanted to at least broach that. But I will definitely read the proposal and provide feedback too.
Yeah. Cool. Back on topic though. Yeah, I mean, anyone really would love to open the floor. Happy to answer any questions of kind of what my learnings were also from like the work we did in the past, but yeah, please don't be shy.
Hey Lucas, Sam here. Any chance you could give us your thinking on how, Steakhouse or Gauntlet may plug in and what services they may actually provide? Maybe a little color on how.
Yeah, so typically, and this depends on which market software contracts we actually end up using, but the parameters you have to pick, right, are loan to value ratio. So like, can you borrow? Well, first of all, which assets are approved for collateral? That is the most important one, right? And the difference here is like launching a pool on Centrifuge, like the performance of a pool on Centrifuge doesn't affect the performance of another pool. In a lending market, though, typically, right, you supply liquidity, and then all of the approved collateral can be used. And so you have actually dependencies, right? Like I can decide to invest in a real estate pool and not invest in a trade finance pool, and that's my decision. On Centrifuge, it's very easy, and like I don't have to worry about it. It's not that easy when you create a lending market where like this should be pooled, right? It's the same pot of money. So in the end, you have to make a decision of which assets are actually should meet the minimum criteria, such that the lenders will actually not be concerned about supplying liquidity to the market. So that's the first one. The second process is then setting the right risk parameters. So there's a loan to value ratio. How much can you borrow against these assets? There are typically like liquidation penalties. There are optimal interest rates. So like, should the market aim to like return 5% a year annualized? Should it aim to do more, right? Like those kind of questions. And so all of these things kind of ultimately depend on the demand and the supply in the market. And so that's the risk management function that kind of like these different service providers help do in like other lending markets as well, like Aave, Euler, Morpho, for example.
Yeah, and how do you anticipate grouping or clustering some sort of limits around which assets can be pooled together? Do we think there's going to be one pool to rule them all? Or
I think to start, you want to do one, because if you split liquidity, you're going to effectively cut the size of transaction half for the people can do, right? So I think it's not realistic that we launch 10 different pools when we will struggle to fill one. So I would start with one, and then from there, like see if there's need to slowly like differentiate.
Got it. So thank you. In other words, the service providers will be a voice to help consolidate our thinking on what asset classes can leverage the one pool that we start with.
So when you look at how like Aave Governance, for example, manages the parameters of the Aave market, I think that's like a good example where like you have different service providers that can make proposals and kind of do risk monitoring and make sure that these assets parameters are adjusted. And so that is how I imagine it could work. I think ultimately the market should be governed by token holders, right? And so then like these kind of parameter proposals, and probably would still be voted on by token holders. That's definitely one way we could do this. Yeah.
Great, appreciate the insight.
Lucas, are you thinking it's mostly going to be trade finance and treasuries, or do you have any other asset types in mind?
So based on my experience of how quickly demand and supply can change in DeFi today, where most of this liquidity is coming from, I don't think it can really be something where the underlying asset is takes longer than 7 days to liquidate, because that's just like, it took about a month for DeFi TVL to go from like to go down by like 70%. This is very like kind of dark memories from the FTX crash and other kind of crazy events that we had in DeFi, right? But like, it's not uncommon. It happens every couple of years, and you do not want to have a market where then like the market becomes illiquid. And so I think I would start with the most liquid, which is like public market credit products. So like either government T-bills or like investment grade credit.
Makes sense. Thanks.
Are there any other questions to Lucas and this proposal? Kate?
Yeah, I just wanted to check the process so that we can be really clear about what we're asking people to do. Is it correct that this IRC is effectively asking the DAO to give a high level yes to KF, the protocol lab team, to build the RWA focused lending market to give users the ability to borrow and lend, and then there'll be a second and third proposals at later dates on risk management and potentially on the technical implementation? Is that
Correct.
an accurate description?
Yeah.
Any idea of like when those second and third proposals would come?
As soon as possible. I mean, the first proposal is to start the research and conversations and kind of do this development. I'm going to regret mentioning any timelines without thinking about them much, but I think like just kind of these problems are problems we that can be solved in a matter of weeks or months. There's the biggest hurdle is going to be the legal structuring, and so that I think will take some time and is also what needs to be started the earliest, right? Setting governance parameters, technical decisions, I think those we have a bit more time. But part of the reason why we're kind of proposing this in a way that is still relatively high level is so that like there's a go ahead to start kind of developing this legal structure.
Cool, thank you.
I have a question, if that's okay. Can you go through once more really quickly? I may have misinterpreted, but can you go through once more really quickly the liquidation process of liquidating someone who is long, let's say, Treasury bills and has borrowed, 50% of the value of those bills in USDC? Is generally in my experience with DeFi, we're either liquidating people into liquidity pools that are open pools on Uniswap or whatever else, or we're getting liquidators to step in and bid for the assets. It's my understanding, roughly from a legal perspective, you can't have un-KYC people coming in and bidding on these assets. So is the plan, if someone can't meet their margin requirements, to literally go back to the issuer, turn it back into dollars, and that's how you'll cover the borrow? Or can you just outline that one more little time for me? Because the LN market is obviously great in the good times. It's, free money almost, but it's in the bad times, it gets dicey very quickly.
Yeah, so which is why like it has to be very liquid, because as you said, like if you have a liquid token market that you can just sell the assets on, like a lot of the crypto native collateral and lending markets, then yeah, you don't need to worry that much about it. Although even there's like risk, right? Like the best example is the Curve situation that happened where the Curve founder borrowed a bunch of money, double-digit millions, on his own tokens, and the position became so large that it was unlikely that with the liquidity of the market, actually you could liquidate this at all, right? Like, because you just create so much slippage that by the time you're done selling it, it's worthless. And so it would have cost, actually likely would have cost like a couple of million in bad debt for Aave. So this does also happen with like these liquid tokens, but it generally is, and this is like one of the risk management parameters, is actually setting the right size, the right liquidation times and thresholds, so that you minimize the risk of this happening. You're right though, there is no liquid secondary market today. And actually, maybe why are we talking about lending today and not secondary trading? I think there's both are usually come hand in hand, and both will have to happen for real world assets, but lending actually is a lot simpler to build than trading from a regulatory perspective. So it's actually easier to do this, which is why I think it makes sense to start. But what will happen in the event of a liquidation, given that there isn't a Uniswap pair that you can just sell it into, what I expect would happen is, first of all, other lenders in the market will see, okay, I can buy Treasury bills at a 5% discount. This is probably a good deal for me. I will buy it. And so anyone that is kind of permissioned to hold the underlying tokens, right, can actually participate in liquidations. But the other thing, as you said, is also, I think, a good like last resort is just, if the market does become illiquid, there's immediately a redemption triggered in the underlying pool, and as soon as cash comes back, right, like users can withdraw it. So in the case of a Treasury bill pool, the underlying Treasury bills, worst case, it happens on Friday night, US banking hours close, Monday is a banking holiday, so like you will have to wait until Tuesday, right, for the markets to open and for this transaction to get wound down. So like you'll wait, like you can wait a couple of days, which is the worst case scenario in case. But what you will also happen is, right, like if the market becomes so illiquid, then like interest rates will jump to like, I don't know, like instead of like 5% on T-bills, like it'll be like 8%, right? And then someone that's borrowing from that market will say, oh, actually, I'm borrowing way too much. I'm going to like try to repay some debt because I'm paying too much. Or a lender will come in and say, well, actually, like I'm going to like lend at 7% against T-bills, and like that will create a market, right? This is why it's called a lending market. So, but in the end, right, like if there really is like a flight, like out of like this market, like flight to safety, if FTX happens, right, then yes, then this is for me a big reason why I think like you have to be very careful bringing on like very liquid assets, and why I would really just start with kind of these public very liquid products.
All right. Thank you very much.
Please, one last thing, Orhan.
Right.
Please comment on the forum post. Governance process. There will be a longer RFC process. Please share any questions, any ideas. We'll start having some of these conversations with like who could be helpful now that it's public. Like we can start talking to service providers, to lending markets, etc. So that will happen next. Definitely engage, and we'll hopefully put it up to vote after a bit of discussion.
Don't worry, I'm willing to buy Treasury bills at a discount, so just let me know if you need help out.
That would be great. You know, if you want to become a liquidator, that's perfect.
All right. Thank you, Lucas, for presenting and taking the questions, and thank you everyone else for all your good questions. So I posted the link in the chat for the RFC on the forum, so you can continue there. All right, moving on to the next point on the agenda, we have the updated Treasury spending agreement, which is, as the name indicates, an update to the previous one that was made back in September last year, I believe. So Kate, will you take over here and let us know about what this is about?
Yes, thank you. Cool. So hi, everyone. It seems like this is the governance call of proposals to the Centrifuge Treasury. The lending market has a funding component, and so do the two proposals that we'll be hearing about after I speak. So I want to take us back to this agreement, which is still in RFC, and just pull out a few of the key points that we want to be clear about as a DAO. just to start with, what you're seeing here is a projection of the Centrifuge Treasury for 6 months, in 6 months' time, by calculating block rewards without protocol fees and, of course, without any spending. But we're not going to dwell on this. It's just a little snapshot. What I'm here to do is remind you about the updated proposal. But first, I want to have a little look-see at some other Treasury proposals from some other DAOs, just so that we can start to think, what do we want to spend our money on? And Devin and others, feel free to chip in. So Polkadot funded a music video for $178,000, which took 2.5 years to produce. And they paid for a media group for $1.6 million. That took place, that worked for 6 months, and they didn't even have an audit. But I don't know if that is as good as Kusama, who funded members in their DAO to get a tattoo of the logic of the proof of ink protocol, getting a tattoo on their body. And I wonder if we've got anyone in the audience that actually was a recipient of this fund from the Kusama Treasury. Do we have anyone with a tattoo? Oh, yeah, we've got someone showing the tattoo. Great use of Treasury funds there. Thank you, Ryan. And I'm really glad that you have the POI of the Kusama Treasury to show us all. I'm not sure how much that proposal cost, Kusama, but if you do have the details, just put them in the chat. And I wish Erica was here, because NownDAO funded a children's book to educate future users. So wonderful examples of some things that other DAOs have done to spend the money. And yeah, that is actually an image of the children's book. So yeah, millions of dollars have been spent from DAO treasuries without clear ROIs. And of course, we want to make sure that we do have extremely clear return on investment and value for what we choose to spend. So this agreement that is currently in an IRC, if passed, makes us bound to this agreement to continue to be cautious and conservative in spending, but also to agree this updated agreement changes it so that the DAO no longer needs to completely avoid treasury spending, which was the previous agreement, but it should seek to establish a clear process and objectives for treasury spending proposals. So does anyone think that a great idea for a proposal for the Treasury is to buy 5 Lamborghinis, two in Europe and 3 in the US, Centrifuge branded, and we'll just send them around to all the events? Any takers for this? No? Okay, good. So the objective of this little update is not to be the mean lady who says don't do any spending, because it is to point out that the agreement calls for this very clear process for and objectives so that people know what to propose, so that we give them some idea, right? So we do want to grow Centrifuge and help achieve the mission. And we do want to use the Treasury to do this. And we do want people who are going to make a proposal to have some objectives and a strategy so that they can actually adjust their proposal, or even propose it in the first place according to the things that we decide as a DAO is going to make Centrifuge bigger, better, stronger, for example. So that is kind of another output of this proposal. We will be starting an RFC articulating this strategy, and we'll be getting all of your input. For example, do we want to be spending primarily on development and integrations, new products, new tech, or is it institutional marketing that we want to focus our spending on? Is retail marketing a small focus of how we spend our money? I don't know. Perhaps it's all in the opposite direction. Let's decide together, and then let's use this updated Treasury agreement to ensure that we are making great proposals to spend our collective Treasury. And yeah, that's all. Any comments or questions? I don't know if we've got much time, actually. I'll leave that to you, Orhan.
We have some time for a couple of questions or comments. So, but first of all, thank you for that very interesting presentation, Kate. I really enjoyed it. So now's the time. If there are there any comments to what Kate just talked about and the agreements about spending our treasury? Any thoughts on that?
I mean, just personally, I feel that there should be a little bit of marketing, and this is obviously Baji's wheelhouse with just toward a little bit more of the retail folks. I know that institutions are clearly aware of Centrifuge, and that's going to always be the target audience because you want to do these kinds of things at scale. But obviously, I'm a huge fan of Centrifuge. Everybody who's here, who's building, working. And I try my best just to talk to people about Centrifuge when I have the opportunity to do so. And a lot of times people just, they don't get it, or they think it's, boring, or, oh, how much can my staking rewards be? The typical things that you have to put up with, I think, to an extent with some of the, more retail crowd. But I just feel like there's so much value to be had, either just getting people in who maybe are smaller retail investors because they may become active contributors like me or others who are on this call. So I feel that there is some value in trying to help spread the awareness of Centrifuge, because no one's going to deny how an absolutely hot a narrative RWAs are right now. We see this all over our timelines. We see it in feeds. And I just feel like Centrifuge isn't necessarily capturing a lot of that, at least from the retail side. But I feel like there's a lot of fertile ground to be covered if we wanted to move in that direction.
Okay, cool. Thanks, Ryan. We won't talk about what will be in this, like the spending objectives now, because that's forthcoming. But when that does happen, I'll be holding like a lot of stakeholder engagement. And so you can come and give your view and we can like really get into this discussion. And I'm sure there's a lot of people that have viewpoints, and I'm definitely not dissing retail. I don't want you to think that, okay? So let's move on to the next presenter or the next proposal.
Yes, but before we do, I heard you ask whether somebody had that tattoo, and it sounded like somebody had, but the screen was being shared, so I didn't see it. Is there any way we can see that one? If it's kids friendly, of course, the view.
Yes, it's Ryan. He's showing it now.
Yes,
This is the
there it is. Thank you, Ryan. All right,
okay.
I'm happy now. We can move on. So this is a good transition into the next point on the agenda, which is a Treasury proposal from for providing an additional amount of CFG into the Omnipool. And Spazcoin, if you are here with us, will you briefly explain what like the key parts of that proposal, and then maybe take a couple of questions or comments afterwards?
Sure. To keep it brief, I'll try to focus on just leaving time for questions. But yeah, Spaz, I'm a member of Chaos DAO, and I'm here to advocate for more usage of protocol-owned liquidity within the Centrifuge and Polkadot ecosystem. One of the best POL opportunities I see for Centrifuge is to deposit an additional 710,000 CFG or 5% of the treasury into the Omnipool to further increase liquidity and eventually enable a large lending and borrowing market for the CFG token on Hydra. 5% may sound like a lot, but the token's what we spent, so when we depress the value of the Centrifuge token, it provides a valuable service to the community, avoiding Centrifuge spending money on liquidity incentives. So maybe that's enough. Let me know if you have any questions.
Right.
Yep, go
Hi,
ahead,
Fred.
Marcus, Matthew. Or was that a mistake? You enabled the mic? All right. Looks like that was a mistake. So are there any comments on this proposal from Hydra? Sam, please go ahead.
Hi again. Just to make sure, I didn't read the proposal, but could you encapsulate where it will be parked and what kind of liquidity incentive will it act as if it's not being spent? It would be helpful to get a better idea.
Sure. Okay. So, so it's not actually being used as a liquidity incentive. That's actually the kind of counterpoint I was making to Endure last night in a post. Oftentimes, projects are trying to create liquidity for their token, and they need to incentivize people to deposit liquidity onto a DEX. So I calculated that from several proposals I've seen from Interlay and A-Star, that they're spending about $2,400 a month on liquidity incentives per $100,000 that this community deposits into the DEX. That's quite a large cost. If you look at the $400,000 that Centrifuge has already deposited into the Omnipool, over the 10 months that's been live, that would have been a price of like $90,000 in incentives just to incentivize people to put money into the Omnipool. So that's why I think protocol-owned liquidity, where the protocol itself deposits the tokens instead of having to pay others to deposit it, is very powerful. So, so right now I'm very interested in enabling larger lending and borrowing markets of several parachain tokens into Bifrost or Interlay or Hydra, and they need somewhere to liquidate any positions that go bad. And so the Omnipool is currently the largest source of that. I'd like to increase the size of that pool of liquidity for Centrifuge token to enable larger lending markets. So again, that would be just another deposit from the Centrifuge governance into the Omnipool. So the tokens aren't spent, they're just used actively in trading. Indior was calculating what he thought was maybe the cost of it. He was looking at a impermanent loss of maybe $2,000 right now. That's doesn't seem actually like that much compared to the overall services being provided. So does that help give you an answer of it's a deposit, you're not spending them, they just sit in the Omnipool indefinitely, providing that service to the community?
Could I ask, so what would the option be for the DAO to kind of unwind or like undo this if, like, say people said no, it's not worth it? What actually,
Sure.
so like, and like with what's in the current, what the parachain is providing current liquidity, if you withdraw it, the impermanent loss is like what is the pair that you're getting back, or what other assets are you getting back?
Sure. So first of all, each parachain has a sibling account on other chains. So the location of these tokens as they're deposited into the HydraDX parachain is actually on the sibling account that can be directly controlled over XCM by Centrifuge Governance. So if you wanted to unwind the position, you'd literally make a Centrifuge Governance proposal that would execute XCM transactions to remove liquidity from Hydra. Now, the question of what token do you get? Hydra actually has a 2-token model where they've got HDX as their governance token, but the token that's inside the Omnipool that actually ties everything together is called Lerna, LRNA. And Lerna is actually ends up acting kind of like an index fund or an index of all the tokens that are in the Omnipool. So when you remove the liquidity from the Omnipool, you receive back Centrifuge tokens and LRNA, that Lerna token, as kind of a substitute for your impermanent loss. And then you can sell that LRNA token on the HydraDX pool to get back any other money you want. I actually did this recently with IBTC withdrawal, and I actually got some dust, like very, very, very small dust in BNC and A-star from it. But in general, it was the Lerna and the original token, my IBTC, that I got back.
Okay.
Go ahead. Oh, sorry, Lucas, do you have a follow-up here?
No.
Ivan, go ahead, please.
Yeah, hi everyone. I definitely think that this is not a bad proposal, but the question is, this is really a good spending of CFG tokens, because how many HydraDX user active has right now, and how many trades? So, I mean, maybe these funds could be used in something else.
Not sure how to respond, but I can tell you that when I put together this proposal, I can say that there was $120,000 of trades, swaps, in that CFG liquidity compared to, I think, 650,000 of liquidity on the market. So it's actually one of the higher used tokens, higher traded tokens on HydraDX, and that's why I think it'll benefit from more liquidity.
The trading volume CFG tokens has around 5 million right now as a daily volume. So, I mean, what will change for Centrifuge? You will provide all this liquidity apart the increasing of slippage.
The slippage will cut in half. So then you can, instead of making a trade for $12,000 with 2% slippage, you can instead do a trade of like $24,000 or $25,000 with 2% slippage. Now, for those of you who might not be as familiar with HydraDX, they also have a DCA feature, or what it stands for, but it's a way that you can submit a transaction that will then slowly sell or buy tokens over time. So you can say over the next 2 days, make a transaction every 300 blocks for a small amount, so that even further reduces your slippage. Now, it's very beneficial for individuals. However, it doesn't help for liquidations, which needs to be done all in one batch when in one transaction.
Yeah, since maybe we can continue on the forum our discussion. Thank you.
Certainly.
Are there more questions to this proposal to SpaceCoin while he's here? We can take one. We have time for one last question if there is any.
There was an aspect of the last question I think it's probably worth checking in on, in terms of what it'll do for Centrifuge if the daily volume is at the 5 million mark today. I understand the slippage and the benefit within Hydra. What kind of a volume can we expect for Centrifuge at large?
Honestly, I'm not sure if I'm the right person to answer that kind of question. So I can ask other people and maybe feed an answer back to you on the forum.
Maybe I can refine the question a little bit, which is what kind of a volume increase can you expect from Hydra as a result of 5% Treasury CFG allocation?
Again, I'm not a team member, so I haven't done the calculation. Sorry.
I can jump in. I'm also not a team member, but I trade a lot on HydraDX with algorithms. There's two different trading bots that trade the DOTS CFG pair. In layman's terms, HydraDX's liquidity curve is spread similar to a V2 model. It's slightly different because it's, as SpaceCoin said, there's a Lirna pair that's basically the medium of exchange between all these different tokens. But again, in layman's terms, judging from how the pricing curve, if you increase the liquidity in the pool, you definitely will do more volume just because the bots will have more opportunities to trade. The vast majority of the volume on these DEXs is bots. That obviously is still good for your users because, as SpaceCoin said, there's less slippage. So less slippage means someone can come along and trade more tokens on this kind of decentralized exchange. There is a demographic of users, maybe 30% of users, that just either don't have access to or can't use the centralized exchanges. So that is good. So like many projects, it kind of boils down to, does Centrifuge measure the ability to sell tokens in a decentralized way and total trading volume as one of their metrics to success? If you do, then providing these tokens is probably a relatively low risk way to definitely increase on-chain volumes and kind of, make that percentage of users that don't like using centralized exchanges at all, make them happy. But will this increase on-chain volume? It definitely will. It depends how much based on the volatility of the token on centralized exchanges. But generally speaking, 99% of the time, if you increase TVL, volume will increase because the bots can trade more and more and more. So if you increase the volume, you will get better metrics. That is a certainty almost. If it's not, I'll do the volume if it needs be.
Thank you very much, DeFi guy, for tuning in here as well. Now, we are on schedule with the agenda and the time, so that is perfect. So the next point on the agenda is another Treasury proposal from Tangem Wallet. For those of you who don't know, they were here to present it in the February call. And they gave us a presentation of their wallet. So if you haven't seen it, you can watch the recording from 2 months ago. But they have made a proposal to our DAO for 500 branded hardware wallets with a 2-card set. And let me just check the numbers so I got them right. It's for a 23,100 CFG, corresponding to roughly $16,500 for these 500 branded wallets. So there has been some comments on the forum about this, but we can spend some time on it here. Is Nikita here with us in the call? Doesn't look like it. Well, that doesn't prevent us from talking about it. So that's for those of you who haven't seen the proposal on the forum, let me Ivan, would you be so kind and post a link to it on the forum? Because what it's the token holders in the end, that it's the input from you guys that is the important one. So it's very a simple proposal to relate to, like the amount and what they offer in return. So speaking of spending the Treasury, what are your comments on this proposal? 500 branded wallets for roughly $16,500. Is that something we like? Ivan?
Yeah, just one quick remark. This course is not including only 500 wallets, but also the integration of CFG EVM and Altair EVM, as well as the possibility of swapping in application and 500 wallets. So, and possibility of using Tangem user base that is among 100K users, active users.
Thank you for adding that, Ivan. Yeah, that is correct. It's also the integration of CFG and Altair into their network. So what are the thoughts on this proposal?
How will we distribute the 500 wallets, and what is the two-card design?
Now, it looks like you are asking the right question that many other people ask as well. It seems like we have like a chicken or the egg situation here, like whether we should make this proposal and if it passes, figure out how we use it, or maybe figure out what it can be used for before voting on it. So let's maybe focus a little bit on that. That could actually be interesting to explore. Like, could we see these wallets be used like in a good way to marketing Centrifuge, for example? Maybe you can answer your own question then, Sam, the question you asked.
Maybe if more people see me using Tangem Wallet, but I don't in public places use my, hardware wallets. So.
Fair point. Fair point. So, I mean, they are branded Centrifuge wallets. So there are some comments on the forum on what it could be used for. But are there any other suggestions to how these could be used?
Orhan, I would offer only a suggestion or a consideration if CompuSecure or Arculus is also being considered for a proposal of a similar scope of work.
Sorry, what was your question, Jonathan? Or your comment? I didn't catch it.
The proposal being considered is for a product that would be used for the Centrifuge protocol. I firmly support the proposal regardless of the service provider, but I think the service provider provided offers a fantastic service. My question is what all service providers were given the opportunity to consider this opportunity. And because Tangem is proposing it, I'm not sure if any other providers have been offered it, but I would suggest to the protocol that there be a potential consideration of other vendors as well, besides Tangem. But I do support Tangem for submitting this proposal to the protocol as it addresses a security need as I see it.
Thanks, Jonathan. I unfortunately can't answer your question, but about the other protocols or other products, but this is the first one that I'm aware of that is made to the DAO.
I think this is interesting because here we're getting into governance of like, do we do requests for proposals, right? Like, is a better proposal, hey, we need a wallet. Who is willing, who has the best price, the best product to offer us, and then that way actually requesting that this thing be submitted to, or is it, even a layer back, like what good market, is this a proposal at a security level, as Jonathan suggests, and a utility level, or is it actually a marketing proposal in that this is the best way that we spread the word about Centrifuge? So I'm quite curious about like the level or the order of where this proposal comes from, but I think that's a discussion for another time. Bit off topic. Back to you, Orhan.
Thank you.
And one other comment, Kate. Let's say one of us had the thought, oh, this is good, but we should counter this proposal and say, make the next 500 wallets you sell CFG branded and offer a 10% discount if somebody gets a CFG branded one? Like, how would we align as a community on a counter proposal to a vendor?
Ooh, aligning on a counter proposal. Now that's some high level DAO activity.
This is getting very interesting. There was actually one question to Nikita from Tangem Wallet from Devin. Unfortunately, he couldn't be here, but that was about what it would cost to only make the integration, so only pay for that and then skip the wallet. So unfortunately, we won't get an answer to that because he's not here, but maybe we can ask on the forum in the post. So, but it looks like we can move on from this topic as well. All of these topics are open on the forum, so anyone who feel an urge to write or say something, please do it in those posts. Greatly appreciate it, and thank you for all of you who already commented here in this call. Now, as for the last topic on the agenda, this is an update from the new Silver 3 pool, which launched earlier this month. They had a pool party at the end of March last month, if I remember correctly. And the issuer, Kirill, has an update for us regarding that. So are you here with us, Kirill?
I am here.
Thank you. The stage is yours.
All right. Well, I won't take up too much of your time to make sure we finish up. But yeah, we just wanted to announce the launch of NS3, which is our third pool, I guess. I mean, we had the first one, which was kind of a pilot. NS2 is still live and open on Tin Lake, and NS3 is about to be opened on Centrifuge. So we're just announcing that opening. We're hoping to open it a little bit later this week, and reach out to me with any questions. But we're looking forward to folks coming in. There's a senior and a junior tranche. It's a 2-tranche pool backed by U.S. real estate, our continuing business that we've been doing since 2019. So for a bunch of years now. Yeah, if any questions, please reach out. But that's my only announcement. Thank you.
Thank you, Kirill. We actually have some spare minutes if there is one question for Kirill, if you're up for answering them, if there is a question. No? Otherwise, feel free to reach out to Kirill directly if you have any questions. So what is the best way to reach out to you, Kirill, if they have questions?
There's a forum post, I think, that talks about our pool party. You can tag me there, or yeah, I think that's probably the best.
The forum. Got it.
Yeah.
Thank you, Kirill. Thanks. All right. Well, we are reaching the end of this call. Is there anyone who wants to say any final words before we close?
I've got to say, well done on time management there, Orhan, getting all of these topics with like really good discussion, getting through them all with 4 minutes to spare, mastery. Well done.
Thank you. Thank you. I would like to share that acknowledgement with all you lovely people in the call who asked not too many, but just enough questions to get through here. So thank you, everyone. It's been a pleasure to spend the last 60 minutes with all of you. So thank you for that. I'll see you all next month, same place, same time. Take care. Bye-bye.
Bye, everyone. Thank you.